Value Charts is proud to bring you our Big Fish Trading webinar series. And what we are going to be talking about tonight is this particular successful trade setup. We've used it in the past month. I had some really good success, and bringing it to you again because there are some individuals through our videos and stuff like that, emails, have let us know that they were interested in learning more about the big fish trades and trades that I've been talking about, and they didn't get the opportunity to attend the webinar, the workshop last month. We're bringing them to you again. We think there's some more opportunities to learn this trade and to be ready for the next big fish when they come along. A little bit more information about me. I am a 1995 graduate of Vanderbilt University. At age 23, I joined Merrill Lynch as a full Series 7 broker, and I worked there for a number of years in central Pennsylvania. I did move out towards the Philadelphia area, and I joined the Vanguard Group's mutual fund group, and I worked in the asset management services group of Vanguard for nearly a dozen years. We were handling primarily portfolio management, handling individual stocks and bonds and options to utilize and leverage the cash flow needs of our portfolio clients, and also work with the tax loss harvesting and various other asset management duties in terms of cash flow of the overall portfolio. I've been working with Microcron and Value Charts for nearly 12 months as the stocks and options live trading room specialist. Enjoyed every single day of it. I get to trade, and I get to work with wonderful people, and I get to work with wonderful traders in my room every single day. So blessed to be here, and looking forward to bringing you more information. Okay, if at any time during the presentation, if you have any questions, go ahead and submit them via the GoToWebinar side menu. And that way you'll be able to post the questions as they come to mind. I will try to scan the questions every once in a while and try to answer the questions right then as it pertains to the information I am discussing at that moment. If not, I usually will try to come back and catch and answer the questions at the end of the presentation. Yes, I am based outside of Philadelphia, and I don't sound like a Southerner either, but that's where I grew up, and so hopefully I come through nice and clear. But if you have any questions at all, feel free to go ahead and ask them. Excuse me. Risk disclaimer. We just want you to know that trading or investing carries a high level of risk and is not suitable for all persons. So before deciding to trade or invest, you should carefully consider your investment objectives, experience, and ability to tolerate risk. Now, this content is subject to change at any time without any notice, and is provided for the sole purpose of education and assistance in making independent investment decisions. Now, Value Charts does not guarantee its accuracy nor is liable for any loss or damage which may result directly or indirectly from such content, or an inability to access such information, or delay in or failure of the transmission or receipt of any sort of instruction or notification in connection herewith. Now, any past performance results are shown for illustration and example only. They are hypothetical and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. Now, this is the next disclaimer is the CFTC Rule 4.41. I'll let you read that in detail. We just want you to know that trading futures and options does carry large potential rewards and large potential risk. Don't trade with money you cannot afford to lose. We're not soliciting or asking you to buy, sell futures, stocks, or options on the same. We want you to know that past performance of any trading system or methodology is not necessarily indicative of future results. Okay, just let me quick answer a couple of questions here. Michael, a lot of big fish type trades are noted in the trading room. But I believe they are usually noted in the signal feed, but from the standpoint of notifying you of a potential trade, but we don't give exact entry or exit trade entries right at that particular moment, mainly because from the time you see the signal feed to the time you can act on it, the situation may have changed and the trade may not be there. That's like trying to signal intraday trades with signal feed. It just doesn't work. Let's see here. This particular workshop that this trade and this potential workshop this coming Thursday is not specifically part of the monthly platinum membership, but it is at a much discounted rate for value chart clients and traders that are platinum members or have been platinum members in the past. Okay. All right, give me 1 second here. Excuse me. All right, let's go ahead and get started. Conventional trading wisdom, something from ancient times. If you give a man a fish, you feed him for a day. If you teach a man to fish, you can feed him for a lifetime. There's a lot of good wisdom in that particular saying, and that's why I like to call this type of trading big fish trading. As a ancient fisherman, you could always go out in your boat if you live near the ocean, bring in a catch that would feed and take care of your family. There would be a catch that you could sell to your neighbors by the seashore, and that would bring in additional income for things that your family would need. A fisherman taught his children how to fish so they could eventually provide for themselves. This is a decent catch. It would take care of a family and a family's need. So again, I like to equate trading to fishing because it, to me, is a skill of being able to sustain your family. Now, this is a nice catch, but every once in a while, it always pays off to land a real big fish. Okay? These are the big ones that could really make a difference in a fisherman's life. When I was thinking about the idea of big fish trading and just the methodology in general, kind of brought to mind one of my favorite shows on the National Geographic Channel. It's actually called Wicked Tuna, and it kind of served as an inspiration to this webinar. In the show, I'm amazed at the value of these particular fish. This is a bluefin tuna. This bluefin giant can weigh up to several 100 pounds each. And when they get one of these fish on the line and they're able to land this fish, that could bring the boat income upwards of $5,000, $8,000, $10,000 plus per fish. It's amazing of what kind of bounty fishing like this can bring, and that's kind of what I want to bring to you in these big fish trades. Definitely. All right, so what do we mean by big fish trading? This is the outline for the webinar. What do I mean by big fish? Big fish trading. The building of wealth with large potential trades. I'm going to talk about catching the big move right from the start. How do you manage your position with little risk? What do I do when I have big fish or big profits already on the line? How do I manage my trade? And I'm going to talk about a recent big fish trade in Priceline that netted roughly $63,000. And then the question is, what is in the water now? I'm going to be a little bit more thorough with the answer to that, so you'd want to stick around to the end. Okay. All right. What do I mean by big fish? A big fish trade is a winning trade of sufficient profits that can make a sizable impact on your trading account. When I say a winning trade in this particular aspect, I'm talking about something that can be a 100% plus return, a double your profits kind of trade or more. I want a trade that has a quick return of profits. We're talking about a swing trade time frame, anywhere from 2 to 4 trading days. Sometimes it can last longer. It just depends on how strongly the stock is moving. A big fish trade, when we are entering the trade, we're talking about taking on relatively little risk. The trading capital, we try to best to minimize the risk on the entry, and then and maximize the risk maximize the profits on our way out. Now, in light of a normal 2 to 5% a 2 to 5% allocation of each trade in your trading account, we're talking about a trade that doubles. So we're looking at an increase in your trading account anywhere from 2 to 5%. That is pretty sizable in the grand scheme of things. Now, the first step in becoming a successful trader and utilizing these big fish trading setups, we want to think about building our wealth with large profitable trades. Long-term success in trading is built upon steady profits, steady increases in your account. That's what we're looking for: steady growth with consistent profits with small losses. Now, what we want to do is punctuate this steady growth with healthy doses of big fish winners. We want you to realize that compounding your account is your goal, and then you should realize also, and this is an aspect of big fish trading, know when enough is enough for you. Don't overcommit to a larger percent of your overall portfolio to these trades. Take profits as profits are rolling in, so that way we can consistently bring in money and then therefore avoid taking losses. All right, just a really quick screenshot. I do show this to my trading room every once in a while. Just looking in general that a steady return in your portfolio, say roughly 2% a week, results in an 8.25% per month return. Starting out with $10,000 and compounding our gains back into it over a year, we're looking to go from $10,000 to $28,000. Again, it's not to promise any particular rates of return, but we wanted to show you the power of compounding and how small profits can really, over time, make a big difference in your trading account. All right, so let's get started with big fish trading. All right, catching the big move right from the start. What are big moves? In order to talk about big moves in the market, really want to start with the fish itself. What do I consider a big fish type stock or ETF? I'm talking about large dollar value stocks that have a large average true range. I want stocks that make strong directional moves, not necessarily a large cap that just just creeps higher or lower. I want a stock that actually moves up and down in price over a large range. We want stocks that have highly liquid options. Therefore, we can utilize the leverage of options to really magnify our gains and to minimize our risk. Examples of these types of stocks, we're talking about Priceline, Google, Apple, Netflix, Tesla is one also. Okay, just looking at the different stocks, we have Priceline roughly around $1,200, average true range around 30. Now Google after the split, we're talking about 550 roughly, average true range of around $10. Before the split, we were talking about Google right around 1,200, and then moving around $20 to $22 per day. Apple, we're talking 525, average true range roughly around $11 a day. And then Netflix, not so much because it's a large dollar value, but relative to the dollar value, it actually moves quite well in terms of average true range per day. So Netflix, I like to throw that one in also. Now, how do I find these big moves? I know what stocks I'm fishing for, but how do I find these big moves? Basically, what we want to do is use the power of multiple time frames. We want to use multiple different time frames to identify trading opportunities. Excuse me. The first time frame is what I consider the longer term time frame, either a daily chart or a weekly chart. Now, I primarily use a daily chart, and this is the chart that you want to use to identify turns in the price action or breakouts in the price action. Okay, this again, the longer term time frame, I use a daily chart, and this is where we identify potential points where turns occur or breakouts occur. Now, I couple that with a short-term time frame. Here I'm talking about a 15-minute or a 5-minute chart or shorter-term tick charts. If you're in my trading room, you know the tick charts we use during the opening hour and a half of the day. Well, those are the same tick charts I'm talking about here. And what we are trying to do when we're fishing for these big fish trades, we are utilizing the short-term time frame to identify what I call entry trades. Okay? Again, longer term time frame, daily charts, that's where we identify potential trades, turns or breakouts, and then we use short-term time frame charts. Pick your flavor, whatever type of chart you would like, but we utilize these short-term time frames as charts to identify entry trades. Okay. Next question is, how do we get them? How do we get them on the hook? How do we get these big fish going our way? We use the power of entry trades. Again, we're using a short-term time frame to carry out entry trades, and here's where it's important: in the same direction as the longer-term time frame opportunity. Okay, I'll repeat that. The power of entry trades is reflected in the use of short-term time frames to carry out entry trades in the same direction as the longer-term time frame opportunity. An example is for a bullish opportunity on a long-term time frame, the entry trades that you want to take advantage of are bullish divergences or falling and descending wedges that will be breaking out to the upside. If you're looking at a bearish opportunity on a long-term time frame, the entry trades that you'll be looking for are bearish divergences or rising and ascending wedges that were likely to break out to the downside. One other type of entry trades that I did not include on this list are actually breakouts to the upside for bullish opportunities and breakouts to the downside for bearish opportunities. But again, the most important aspect of getting into these trades, getting these big fish trades on the hook, is utilizing the shorter term time frame in the same direction as the longer term time frame. Very important. Okay, now once we have this fish on the line, how again do we to manage them? Once we get a position in place, so if we have a long-term bullish opportunity, we want to buy calls when we have a shorter term time frame trade. And then once we're in that trade, we want to maintain our position with small risk or no risk stop loss. Again, the understanding is that the primary purpose of the short-term time frame entry trades is to get your foot in the door. Okay, you want a position in place to carry through what you're thinking on the long-term time frame. We want to get our foot in the door, get a position in, and not focus on immediate profits. Okay, now with this, again, you need to be patient because you could get stopped out several times. Okay, you can take a bearish position, it can start to go your way and then turn right around and stop you out either at break even or at a small loss. You could be in you could again be stopped out several times. But what you want to do is to make sure you're taking these trades to be in the position for the larger move. Okay, that is the goal. Now that you have a position in, and now that on the time frame it's working out in your direction, now you're really starting to get some profits built into the trade. Now that you have those big profits, how do we keep those profits in place and let this thing go? Fishermen usually refer to that as fighting the fish and eventually landing him, bringing him on the boat. Once you get in a position in place, again, you want to maintain your position with a small risk or no risk stop loss. Now, again, once your stock has moved in the direction of your profit, once a stock has moved in your profitable expected direction, you have what I call a profit cushion. Okay, you have some built-in profits there, and that allows you to maintain your position with a reasonably placed trailing stop. And normally I place them at recent pullbacks. Okay, now this is where it's a little bit tricky because you want to give your fish, your big fish, enough line so you don't get stopped out and then have it continue on without you. But you don't want to keep it so far away that if the big fish actually turns around and goes completely against you, you lose most of your profit. It's a balancing act. But it's much easier to maintain a position with a profit than worry about a position when it's going against you. So, you know, if worse came to worse, this is the better problem to have. So once your stock has moved in the direction you expected, utilize your profit cushion and then maintain your position with a trailing stop at reasonable, logical pullback areas. Okay? Again, how do I land the fish? How do I close out the trade? First of all, just like I was saying, give the big fish enough line so it can bounce around like it normally does in the markets, but allow the trade to run. Use the longer term time frame chart as a guide to when to begin to take profits. Okay, this is when you have that profit and it's moving in the direction you're expecting it to. Now you have the ability to construct your exit plan based on what is the potential move on the long-term time charts. Okay, you can use value targets as an exit target. You can use the 8-day EMA. You can use the 21-day EMA or the 50-day EMA. You can use Fibonacci retracement levels. That's another way to plan your exits. And then you can use previous support and resistance levels. All four are very legitimate ways to plan your exit. And when I say plan your exit, I'm talking about it's okay to have planned and staged partial profit targets. You don't have to buy at the top, hold everything if it's a bearish trade, and sell everything at the bottom. It's okay to get in a position, take partial profits here, take partial profits here, and then maybe it's really close to, this is where your final target, you take 1/3 off, 1/3 off, and 1/3 off. It's no problem. It's moving your way. These are logical points based on these different target levels, and the trade went perfectly the way you expected it to, and then you're able to sell the last third at where you think the maximum profit is, and then it's a really good big fish trade. So again, it's okay when you land that big fish trade to have staged and specific value target exit points. All right, now that I've shown you the overall idea of the big fish trade, want to quickly touch on the big fish trade I did in Priceline back in February. This trade occurred over 2 trading days, almost 2.5, and roughly $63,000 in profit for 20 contracts. Okay, again, this trade occurred in Priceline, and you can see that this variation of a big fish trade pulled back over 2 days to the 8-period moving average right here, and just that one little move in a big fish stock can result in a lot of profits. So that's the move right there from this point. Roughly on February 18th to this point down here, and I exited on February 20th. All right, the trade basically is Priceline was basing sideways here for a number of weeks. We made a 3-day base on these MQ trend dots right in this area right here. And you can see momentum was actually starting to weaken to the upside, and the resulting move was 1, 2, 3, 4, 5, 6, 7, 8 days of higher highs, moving straight up. I believe the market was moving also, but this was nearly 2 weeks of price action heading higher. So after hitting significantly overvalued a couple of days in a row after breaking through these MQ trend dots and watching this MQ momentum indicator line and the histogram bars kind of flattening here, I started looking intraday trades, within each day for bearish trades. Okay, and the afternoon right here of the 18th is when I actually started taking some trades, and I will show you exactly what is going on in this area right here, significantly overvalued at roughly 13.15. Okay, so what you can see is that the afternoon of the 18th at roughly 12:35 we hit the high of the day. Again, this is on the daily chart. This is significantly overvalued. Prices came down roughly to the 310 level, and then we bounced off that 310 level, went higher. Came down, touched it again, bounced again, touched it again, came up to this level right here, and then bounced back down again. You can see this is a 1-minute chart. It doesn't have to be, but usually I'm always looking for an opportunity to scalp as I go to make a little bit of money, especially on a big price stock like this. Come down here, and after hitting this support at 13.10 again and then bouncing, I saw that we hit a moderately overvalued on this descending trend line based on this high here and this high here. Also, if you note, the MQ momentum indicator line is actually falling throughout this whole process. So right here, I bought 10 puts, and then down here, I sold 5 of them. Little scalp move, taking some profits. All of a sudden, we jump back up in this area. I buy another 10 puts, and we come down here. This time I didn't sell them because at this point I know that I'm looking for bearish opportunities, so that I'm looking to see if we're going to break through and go lower. We didn't. We bounced a little bit, and then at this point where it looks like we're going to move back down again because MQ momentum is headed down, I bought 5 more puts, so I have a total of 20 puts at this point. We come down here to the apex of this descending wedge. Now sometimes it breaks to the upside, but again, you're seeing what's happening to momentum here, that I actually hold the puts because I am bearish that Priceline will break through this 1310 level, and about 4 minutes later we break lower. We go from 1310 all the way down to 1305. When we make this break lower, I go ahead and move my stop loss to break even. Okay? Because I have a $5 move. Now I have those profits in my my Priceline puts. And at that point, when we are moving down $5 on a Delta 7D option, you roughly have anywhere from $350, between $350 and $400 profit per contract. So roughly anywhere from $7,000 to $8,000 profit at this point down here at 1305. I just moved to break even. I don't take any profits because this is the break that I'm waiting for. So because it is my belief that we're going to pull back potentially to the 8 EMA. Why? Because we've had multiple days of pulling away from the 8 EMA, and when momentum lags or starts to roll over, that is the first logical place of a pullback, is back to the 8-day EMA. So now I have my position in place, and I'm just going to hold it. You can see these are those entry trades I took roughly at 11:35. An hour later, I have 20 contracts in this area right down here, and Priceline is starting to fall. Okay, so I hold the position. We bounce the next day to this high. I'm able to hold the position because I still have a break-even stop here, and then we continue to fall most of the day. Now, a little bit of background on Priceline. Again, this is the 18th here. Here's the 19th. And here is the 20th. The evening after the close on the Thursday the 20th is earnings. Okay, I don't want to hold Priceline into earnings. So my theory on the trade is I will hold it at most into the afternoon on the 20th, and then I will sell it before earnings are announced after the close. So I'm always already intending on selling this position. So on Wednesday the 19th, Priceline continues to fall. When we get to very close to the end of the day, this period here, I sell 10 contracts. Again, because my idea is this is a pretty darn good move already. It may jump up against me in the morning, but at this point, I still haven't reached my target. I am right here on the 19th, but we're still headed down. So what do I do? I sell 10 contracts and I hold the other 10 overnight. The next day we do gap up, push higher, and then continue to fall. Now by roughly 11:30 that morning, I noticed that on the daily chart we touch the 8-day EMA on the daily chart. And honestly, that is good enough for me. That's where I wanted to take my profits, and I'm going to be out of this trade by the end of day on the 20th. This right here is as good as places any, because actually I saw a bullish divergence here, and then I sold the other 20 contracts at this point. We continued down a little bit lower, then we bounce up into the close. So roughly this area down here, right around 1260. Again, I'm into the trade around 1315. I'm out at 1260. So this is what the trade looks like. Priceline moved down roughly $55 in 2 days. On 20 contracts, that reflected in a profit of roughly $63,000, or roughly $3,100 per contract. Okay? That's not a bad trade. But what I do like most about the trade is the fact that it worked out very well. Michael, it doesn't necessarily have to be that you have to watch it minute to minute, because I got in not because I was trading on a 1 minute chart, is because I was watching the price action after it hit the high of the day. That's all. Being able to trade intraday allows me to fine-tune my entry period. Mark, that's a good question. I'm trying to remember, because it was the day before earnings, we had an implied volatility that was twice as much as normal. So this is probably I probably had close to $55,000-$60,000 invested in these contracts. That's double what they normally cost, but it's 100%. It's basically a 100% profit type trade. And I don't expect everybody to be able to commit that level to it. Most people say, well, Dave, I can't do that trade. That's too much money. Well, divide 63,000 by 20. And you're talking about, can you invest $3,000? Okay, that's one contract. And that's at a double implied volatility because of earnings. Roughly, this will cost roughly $1,600, $1,700. Okay? To control 100 shares of Priceline. 100 shares of Priceline is worth $163,000. And with options, you can do it for roughly $1,600, $1,700. It's not bad. Okay? So again, all in all, to summarize the trade, there it is. Good question, Nick. There are other ways to be looking for this trade. The reason why I was looking for the trade is because I watch Priceline pretty much every day. And after you take 5-6 days in a row where you're making higher highs and you're pulled away from the 8 EMA and you're looking at significantly overvalued levels, something's going to give. Something's going to pull back. A stock doesn't go straight up. But who knows when it's going to stop going up. That's why we utilize the power of multiple time frames. I know this looks, this wedge shape pattern here, it looks a little bit wide. It is a 1 minute chart. You look on a 5 minute chart, it'll look more compact, but you'll still see that descent. You'll still see that, you'll still see this wedge. This wedge you can't hide. This is roughly 25, 30 different bars. And even if you're using a 5 minute chart, you can see this wedge shape, especially if you're watching it, because this is a high of the day. Okay, people in my trading room know that I pay particular attention to highs and lows of the day, because either that's going to be the high point and we're going to fall off away from it, or if it's the low point, that could be the low point and we'll move up from there, or that's the level we watch for a breakout if it's going to go higher. Okay? Nope. Everything that I showed you, Steve, is what I was looking for. I'm looking for particular trades. I'm looking for a pullback because of the daily, and I took the trade because of the intraday trade. If you can't look at a 5-minute chart to get an intraday trade, I really don't know. I mean, you could use a 10-minute or a 15-minute chart also. If you can't look at a 15-minute chart, then you're just going to have to trade with the daily. Okay? But again, the move worked out very, very well. I really don't calculate these percentage winners with small losses, etc. Because I see the opportunity on the big term time frame, but that doesn't mean that the trades that I take here to get into the position, that doesn't mean they're lower quality trades. I'm still looking to take good trades to make this happen. It does me no good to trade poorly on my entry trades, because there's still a chance this thing will run higher. Because why? It's been running higher for 8 days. Maybe this is not the day it's going to go higher, but if I can take these small trades and move my stops, that also helps also. Okay? So hopefully you get a little bit of a feel for these big fish trades and how we kind of pursue them, how we kind of structured the idea of the setup. Again, big time frame charts identify the opportunity, shorter term time frames identify the entries, and then how to manage it from there. Use the longer term time frame to give you ideas of where to take profits. Okay. How many of these trades do I find per week? Nick, I'll be honest, there's some weeks you don't find them. And there's some weeks that the opportunity is bigger or smaller. It just depends on what you want to do. The methodology behind the trade doesn't necessarily have to carry from a huge opportunity in the bigger time frame. You could do, I mean, if you look at this is not a life a trend changing trade. Okay, this trade that I took was nothing more, let me clear this, nothing more than a pullback to the 8 EMA. That's all. The power and the profitability of the trade came from the fact that it's a $1,300 stock. It could be just as well as $700-800 stock or a $500 stock and have this thing move back. But the trend didn't change. It was still kept going. This is just a pullback to the 8 EMA. That's a very straightforward type of trade. I just saw the opportunity because it's kind of odd to see this thing go up for 8 days. Okay, you just have to look at charts consistently, and Priceline is something we look at every day, and it just seems out of place. No, you guys have to understand, if you're not familiar with my trading room, I have a stable of stocks, maybe around 20, 25, that we really become familiar with. And that's all you need. I just trade the opportunities in those stocks. I don't use a screener that say, okay, I'm going to screen the entire S&P. I want to say S&P 500, but it's actually 501 now. I don't screen all those and say, okay, here's the opportunities today. I watch the stocks that I'm familiar with, and when you see something out of place, you understand the nature of the stock and that it is out of place, and maybe there's something to take advantage of. And that's what we did in Priceline. Okay, you could do that however you want to do it. There is no secret sauce. There is no magic formula like so many days above the 8 EMA. But if you think about it, 3 days above the 8 EMA, that's in line. 5 days, maybe that's a little get extended. Eight's becoming a little extreme. because the stocks usually don't, they bounce around. VC, I usually use in the money options. In the money options to do the trades. All right, let's quick. I want to make sure that I have enough time here to show you what's in the water now. Now, please keep in mind that these particular trades, I did this webinar about a month ago. And when I did this webinar a month ago, I was identifying opportunities in the markets on or about March 7th. So this particular screenshot was taken on March 7th, and then from the 10th through the end of today, I'll show you, this is like before, and then I'll show you after. Okay, the NASDAQ, bearish divergence, first high, see the momentum indicator, second high, see how we're going down, and this indicator line starting to roll over. This momentum is red. So on Friday, March 7th, NASDAQ looked like it was rolling over. This is what happened. This is the next day. This is March 10th, and you can see we've done nothing but fall. Okay, we actually did have some pullbacks. It has been a little bumpy, but the NASDAQ fell over the next month. Okay, here's Google. Same thing, just like the NASDAQ QQQs. Here is a bearish divergence. Here's the first set of highs. Here's the second set of highs. Notice over here we have green histogram bars. Do you see here a second set of highs? There are no green histogram bars. I was basically saying that the Google was going to roll over just like the NASDAQ and go down. Again, here is March 10th, and Google fell, and then it fell. It bounced last week, and then it fell. Now, please keep in mind, Google, this is an adjusted price. This is where it closed today. But roughly, in Google, we went from about 1,230 down to 1080. So roughly this is a, oh goodness, my math is a little bit shaky, $150 fall in Google. $150 fall. 150. Now if you multiply that by one contract, earning roughly $100 per contract, that's a potential trade of, what's that, $15,000 per contract. I'm not telling you that I earned that. I'm just saying that potential was there. From the high to the low, we actually had from the last swing low to the high up here, we had a 100% retracement as of Monday, and then a bounce today. Okay, but that is the potential trade, a big fish trade that we took in Google. All right, and last but not least, here's that same Priceline chart I showed you earlier. Here's that pullback, that demonstration pullback. Again, here's the first high. Look at the histogram profile. Second high, look at this histogram profile. And again, the timing is exactly the same with the NASDAQ, with Google. And again, this is March 7th. And if we look to see what's happened since, this is March 10th. We fell, we pulled back, we fell, pulled back, and then we fell. From this swing low to this swing high, it is roughly $278, okay? And this move here is roughly $225. We did a pullback below the 76.4% retracement. Now we're actually bouncing a little bit. So again, $225 move. You know, you add a couple of zeros because there's a potential earnings of $100 per contract. Again, not saying that I made that, but the potential for one contract's 22,000. That's a phenomenal move, and honestly, the trade is easy to take in Priceline and in Google. Why? Because the Nasdaq is making the same move. Okay, Nasdaq is making the exact same move. So trades with nice setups in say an underlying stock of the index, it's a fairly easy trade to take. It's not that easy to hold on to because you need a lot of leeway, but you do have a potential. If you had followed the methodology that I lay out in the workshop, you probably got stopped out right here. Okay, so you're looking for a move roughly from 1208 to from 1378 to 1208. That's still roughly $170 move. Still not bad. Yeah, this is a pretty massive pullback right there. But again, the potential there with a big fish trade with one contract is definitely in the water. So, basically, let me see if we're having some more questions here. The MQ momentum indicator is basically a part of our value charts ultimate bundle. We do have the value bars and value charts as one part, and the MQ momentum indicator suite. That's actually pretty important. These are MQ trend dots, these dots here. MQ momentum is one indicator I use every single day in my trading. Definitely. I am usually using weekly options, and the question is well, if it's you're trading it and it's getting close to expiration, what do? You can sell it and buy the next week. What about time decay? I'm not going to worry about time decay when the price is really moving like this. You could go out the same week. You could buy options that expire in 2 weeks. It's just a matter of leverage. It depends, Steve. You have to understand when you're trading. We trade intraday in the room, and then I find myself when we were trading these big fish trades. Based on how it's moving in the day, I could sell some. I could sell my position. When I'm thinking it's maybe getting close to the top of the day, maybe it's hitting a little resistance and starting to roll over, I'll repurchase the puts. So I trade my positions fairly actively. It's more of a question of do I hold a position? Do I hold a position overnight? And then if it gaps up against me in the morning, or if it gaps down in my favor, do I do anything, or do I just hold it? I'm mainly trying to manage the position intraday so it can follow the way I think the trade will work out on the daily. Do I look for a crossover of lines plotted on the MQ momentum? Oh, do I look over these crossovers? Well, that's what the histogram's for. When you have the indicator line crossing the slow line, just like on MACD, you get a change from positive to negative on the histogram bars. I mainly on the daily just primarily look at the direction and the steepness of the slope on MQ momentum, but again, I mean, that's something that you can learn through some of our videos or trading in the trading room, of the intricacies of how we use MQ momentum. I use it all the time. The TTM squeeze, it's different, Stan. MQ momentum's indicator is primarily like an MACD, but just a little bit different. All right. Nick, I really don't want to. I want to talk about the particular setups and not give any particular opinion on a current existing stock. I think Apple could be headed lower. It showed a lot of weakness, but different price levels. Apple is a potential big fish trade, but the looking at it from the standpoint, it's in a choppy sort of price action now. I'm not looking for it to make a big move. And again, that's one of the essences of the big fish trade. I want it to move in the next 2 to 4 days, and I want to make it so that it moves strongly. Well, VJ, you should come to my trading room. I'll do my best to teach you not to lose money in options. You have to know how to buy the right one, or how to best use them. Most people lose money in options because they buy the wrong ones. They buy the wrong ones at the wrong time, and most of the time it's because they buy the options. Kenneth, I don't recall. Let me just put it this way. I'm not bragging, and I can't promise you this will always be the case, but we usually don't lose on a daily basis. So that carries over the month. Thanks, KB. Okay, so let me just put it this way. If you like the idea of big fish trading, because all trading is fractal, meaning you can scale this up to weekly, you can scale this and do position type trading, you can scale this down and do an hour or 2-hour charts, whatever you want to do. You can make it as big or small as possible. It's the method, it's the idea of how we use multiple time frames, how we use all the different exit plans, things like that, to benefit in this type of trading. Big fish trading refers to the stock. It doesn't necessarily mean you have to use it on a bigger time frame. Someone asked me that before. So bigger time frames actually, you can see it means more money. So, but just how to carry these things through. I know a lot of people are asking questions about the specifics of the trade, and in all honesty, I don't have the time right now to go into all those specifics. But I want you to ask yourself, based on what you've heard tonight, do you want to get ready for the next potential big fish trade when it comes around? Okay. And that is what I'm trying to give you in the Big Fish Trading Workshop. Now, by popular demand, we are doing the Big Fish Trading Workshop again this Thursday, 2 days from now, from 6 o'clock until 9 o'clock is the workshop hours. But you all know, I've been in my workshops before. I stay as long as you have questions, and longer if you need support after the fact through email or whatever. Okay, normally this is a $300 class. We are running it offering it for $147. This is the website right there. You can go to valuecharts.com/big, type that right in. You'll go right to this order page. $147 for a trade setup and methodology that you could use the rest of your life and bring in some. When opportunity comes around, it really comes around. I didn't cherry pick this particular setup that we did in basically the entire month of March. It came around, we took advantage of it, we made money. I was just talking with a guy the other day. He actually took one of these big fish. He took the Priceline big fish trade. He came away making over $16,000. That's the first time he's ever done the trade. I'm not promising that you'll do the same, but I think you'll have that tool in your trading toolbox that you could bring out and say, just use that framework to work yourself into a position and put yourself in a position to make money. Okay, so in reality, $147 is nothing to pay for this workshop. One halfway successful trade with one contract could more than easily pay for this workshop. Again, here's the details. of the workshop, and basically you can read it all on valuecharts.com and go to the current workshop. It's listed there. But how to find the stocks that are big fish, how to identify and measure the potential move, how far can a move, like how far can a trade go, how to get in at the beginning, how to utilize options to create a strong position with minimum risk. And then you'll also learn how to generate profits while waiting for this move to start, how to hold on and to manage your profits so you can maximize your gain. And again, I said this here, that how to utilize, how an example, a step-by-step example of how I use this to generate that 63,000, but I'm actually going to do something a little different too. Again, this is the bonus material that doesn't really show up on that last slide. Again, how to generate income while waiting for this big fish trade to start. You can see we're doing stuff intraday, and it may take a day or so for the trade to start to move on the bigger time frame. How do I generate income while waiting for that? How do I trade a big fish trade when I can't trade intraday? I'll give you a couple of strategies that you can use. If you do see a big fish trade setup potential, how can you manage and try to get into a position when you can't do it intraday? I'll give you those ideas also. Again, managing the trade for maximum profits. Again, how do I establish big fish profit targets? And something new, with these recent big fish trades in Priceline and Google that I just showed you, I'm going to show those trades start to finish, and I'm going to break down those trades, section at a time, so you can see that even though it may be depending on how complex or how detailed you want to be, or how simple and straightforward you want to be, how to manage those Priceline and Google trades. They're very good examples of managing big fish trades start to finish. Let me see here. Question. No, the cost to the big fish workshop is the same. It is a 50% discount already. And it is a tremendous value. I think it's more than well worth that dollar amount. Bob, what if you've taken it before? I would do this. I would go through the original workshop, see if you understand it, and see if you have any questions on it. The material, I would say, is roughly 80% original. There's going to be some fine tuning of the trades at the end, where I demonstrate Priceline, and then also this most recent Priceline and Google trades. The essence of the trade itself did not change. Oh, excellent, Ron. Oh, I'm glad you and Susan will be there. It's nice seeing you. Miss you guys too. So, looking forward to seeing you in the class. Thanks, Steve. Hopefully I see you sign up and enter that. Like I said, I'm not, and those of you that are in my trading room, those of you that have heard my webinars in the past, I'm not here to sell you something that you can't use. Okay? I'm here to offer a workshop, knowledge, and my experience trading these trades, and just from a logical trading standpoint, I can't see why you would not want to learn this trade, because it's the mindset. It's the mindset of the setup that can be applied in so many different ways, that I'm showing you how to identify big potential trades. I'm showing you how to minimize as much as you can the risk involved in getting into the trades, because you guys know, if you're trading with me or trading at any time, the entry is the most important part of the trade. And in a big fish trade, once you have a good entry and it starts to go your way, then what you do is reduce or eliminate your risk. Okay? It can't be always 100% elimination of risk, but really minimize it. And then you allow to trade, let your big fish run so you can maximize those profits. But again, always an eye towards minimizing risk and trading well at the entry and then exiting at logical points. Really, if you think about it, if you applied those same principles to every time you trade, you would be that's a very good framework for just being a really good trader. So that's, I mean, if you think about it, that's what I'm going to give you in this workshop. Okay? Everybody, thank you. Thank you very much for attending the workshop. We're pretty much 1 hour in. I'll take any last minute questions. If you have any additional questions, feel free to send me an email at dave@microquant.com. You do have a little bit of time to sign up. Again, it is Thursday, April 10th, 6 o'clock to 9 o'clock. It will be recorded. For those of people that can't make it but really want the information, sign up for the workshop. I will have the recording up as soon as I can after Thursday. Should be by midday on Friday, just depending on how soon it can be processed. And that way you review it, and any questions you have at all. I'm 100% devoted to anybody that attended a workshop. My goal is to make sure you understand the trades. And in doing so, that gives me satisfaction that I've taught you something that you can really use. So please don't think that just because maybe you can't make that time, that you'll have to miss out, because you can still take advantage of this. You can still develop this trade for yourself. So please, don't let the fact that you can't physically be there hamper your ability to take advantage of these trades. Yes, dave@microquant.com. I'm sorry, microquant, you spelled it right, Kenneth. The indicator package, Dan, well, when I show you my screens, you'll see my indicator package. I'm not telling you to go buy the ultimate value charts bundle. MQ momentum, you could substitute MACD. You use support and resistance. You use Fibonacci levels. You use divergences. All those things you can see on a chart without the value chart bundle. It's just, for me, it's easier to see it because I actually bought the bundle myself before I actually worked for value charts. So I learned to use it first, and then I guess I did it well enough as a trader. They offered me a position. But my point is this: don't feel like this is sort of an upsell to the indicators. It's nice. They're very, very nice to have, and I can teach you how to use them. But it's not essential for the workshop. The knowledge can be applied on any sort of platform. Can I buy MQ separately? Yes, you can, Kenneth. You sure can. Look at the various the three bundle systems on valuecharts.com. I believe the one on the right, I think that might be the deluxe. You'll see it's the MQ Momentum Indicator Suite. So it doesn't include the value charts or value bars. That's on the left side. The center box is the one that has the ultimate bundle. Yes, it does work on TOS, Steve. You know, my charts are primarily TradeStation, the ones I showed you. If you have any trouble at all, Kenneth, don't hesitate. Send an email to support@microquant, and our support person, Min, he'll be happy to help you. He's probably not there right now. They're in North Carolina, and they're actually closed for tonight. But first thing tomorrow, he'll be there. Okay, wonderful. Yeah, TradeStation, Kenneth. That's what I use. I like it. I learned to use it on TradeStation because I was trading futures at the time. Okay. Well, again, I just want to say thank you to everybody for staying up late, and everybody for on the West Coast for coming in and taking up your first hour at home with this webinar. Again, please, if you have any questions about the workshop, send me an email. I really want people to take advantage of this type of trade. I really think the opportunity is there when it pops up, and you want to be able to take advantage of it, because you might get. Someone asked me maybe 4 or 5 of these types of trades every quarter. It just depends on the setup. You can use the principles of the big fish trade on smaller moves within a chart also. That's fine. Just like I did over the course of 2 days. Or you could have stretched this out, and it would have been profitable for you over the course of 3-4 weeks here. All right, everybody. Well, thank you very much for your time. Again, looking forward to seeing everybody that I can on Thursday. And again, let me know how I can help. Let me know how I can improve your trading and help you go down the right path with your trading. So please let me know, and look forward to seeing everybody on Thursday. Bye-bye. Good night.